Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at BigBear.ai.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, let's unpack this. We are looking at a company today that feels like it's pulled straight out of a sci-fi novel, but the financial statements look like a horror movie, at least at first glance.
Yeah, it is definitely a complex picture. We are talking about a company that is sitting right at the intersection of two very buzzy, very volatile sectors, artificial intelligence and national defense.
Right, and usually when you hear AI, you think chatbots, you think ChatGPT, you think generating emails. But BigBear.ai isn't exactly helping you write a birthday card, are they?
Not at all. And that is the first thing we need to clear. This isn't a generalist chatbot company. Their entire identity is built around what they call mission-ready AI.
Mission?
Yeah, they operate in high-stakes environments. So national security, defense, supply chain management. We're talking about situations where if the AI hallucinates or makes a mistake, the consequences aren't just an awkward email. They could be catastrophic.
So we're talking about the heavy hitters. Government contracts, three-letter agencies, that sort of thing.
Exactly. And that brings us to their moat, or their competitive advantage. Because you have to ask yourself, what prevents a massive client like the Department of Defense or a border security agency from just switching to a competitor?
Yeah, why not just go with a massive tech giant? Google or Microsoft certainly have the computing power.
It comes down to switching costs. BigBear.ai builds software that gets deeply integrated into complex, highly regulated environments. Think about critical infrastructure or border control systems.
Right.
Once you have a system running that processes data for national security, you don't just rip it out because someone else offered a slightly cheaper subscription. It is incredibly sticky.
That makes total sense. It's like trying to change the operating system on a plane while it's flying. You just don't do it unless you absolutely have to. But I want to touch on something specific here. Edge AI. I keep hearing this buzzword. What does it actually look like in the wild for these guys?
This is a key differentiator for them. Most of the AI we interact with as consumers is cloud-based. You ask a question, it goes to a massive server farm somewhere, gets processed, and comes back. Edge AI means the processing happens locally, on the device itself.
So no lag.
Less lag, but more importantly, less reliance on connectivity. Imagine a drone flying in a contested airspace, or a sensor on a border wall in the middle of nowhere.
You can't just be looking for Wi-Fi signal.
Exactly.
Yeah.
You can't rely on a stable internet connection to send terabytes of video back to a cloud server to figure out if that shadow is a deer or a person. The device needs to know right now. BigBear.ai specializes in that proprietary edge AI.
That is a huge deal. That actually explains why they aren't just getting crushed by the generalists. It seems like the difference between a library where you have to go look up the answer and having the answer already in your pocket when the internet goes down.
Precisely. It creates a moat against broader competitors like Palantir. Palantir is the giant in this room, obviously. But BigBear.ai tries to win by having that specific domain expertise and niche integrations rather than trying to be everything to everyone.
Okay, so they have the tech, they have the cool Mission Impossible vibe, but let's look at the numbers, because I was looking at the financials for this talk, and honestly, my jaw hit the floor. We have to talk about the ugly side of this business.
You are looking at the profit margins, aren't you?
I'm looking at a net profit margin of negative 295.61%. That is a number.
It is a startling number. It's the kind of number that makes value investors run for the hills.
And the trailing 12-month losses are $426 million. Their expenses are massive, over $465 million in other expenses alone. So the obvious question is, how are they surviving? How do you run a business when you are spending that much more than you make?
It is the paradox of high-growth defense tech. And honestly, the bad news continues if you look at revenue trends recently. In the third quarter of 2025, their revenue was $33.1 million, which was actually down 20% year over year.
Wow.
Yeah, and Q2 was down 18%. So the business was actually contracting.
Okay, shrinking revenue and massive losses. This sounds like a recipe for disaster. Why are we even talking about this stock? Where is the good?
The good is the balance sheet. It's what we call the cash fortress. As of September 30, 2025, BigBear.ai was sitting on $456.6 million in cash.
Wait, nearly $500 million in cash.
Correct. And that changes the entire conversation. When you have that kind of liquidity, it acts as a massive buffer. It allows them to weather those operating losses we just talked about. They aren't living paycheck to paycheck. They have a war chest.
So that liquidity gives them time. It buys them a runway. It's like having a rich uncle who pays the rent while you write your novel.
That's a great way to put it. And they aren't drowning in debt either. Their debt-to-equity ratio is a very healthy 17.2%. Plus, on January 2nd of this year, 2026, they announced further debt reduction.
Oh, nice.
So financially, they are actually quite stable despite the operational burn. They are using that cash not to pay the light bill, but to make aggressive moves.
Okay, so they have a piggy bank that's full, and they are deciding to spend it. This leads us perfectly into their strategy. They aren't just sitting on that money, they are going shopping.
They are. And this is the pivot point for the company. The headline acquisition was Ask Sage.
Ask Sage. Sounds like an advice column, but it cost them $250 million, so I assume it's more than that. This deal closed right at the end of last year, December 31st, 2025. What did they buy?
They bought generative AI, but with a specific twist. Ask Sage provides generative AI capabilities designed specifically for secure defense workflows.
Ah, okay. So, like we said earlier, the Pentagon can't just use ChatGPT because of security risks.
Exactly. You cannot type classified troop movements into a public large language model. Ask Sage solves that problem. It brings that generative capability, summarizing reports, writing code, analyzing text into a secure walled garden suitable for government work.
So it's safe.
Highly safe. This is BigBear.ai's bid for margin expansion. They believe this software will be high margin and highly scalable.
It's essentially bringing the productivity revolution of AI to the people who were previously locked out of it due to clearance issues. That sounds like a product with a built-in customer base.
It really is. And it's not just acquisitions within the U.S. They're making friends in high places globally. I saw a partnership announcement from January 28, 2026 with Maka Technologies.
Yes, Mokta Technologies. That sounded interesting. What's the play there?
This is a crucial piece of the puzzle. This partnership focuses on AI-driven customs and border solutions. It signals a move into the Middle East market and specifically into digital trade and border security.
So if we zoom out, the strategy seems to be use the massive pile of cash to buy growth and diversify. They were too dependent on old contracts that were shrinking, so they're buying their way into the hot new markets, secure Gen AI and border security.
That is the pivot, and management is confident it's working. Despite that dip in revenue we mentioned for Q3, they actually raised their full-year 2025 guidance to between $125 million and $140 million.
Wait, hold on. So revenue was dropping in the reported quarters, but they told investors, don't worry, we're actually going to make more than we thought.
That is the signal. It suggests that they are seeing an acceleration in demand for these new deployments that is going to offset the losses from the older parts of the business.
Interesting.
They are betting that the defense sector is waking up to AI, and they are positioned to catch that wave.
It takes some guts to raise guidance when your chart is pointing down. That implies they have some signed contracts in their back pocket we haven't seen fully recognized yet.
Or they expect the Ask Sage revenue to kick in very quickly. It's a bold move, and it puts a lot of pressure on the upcoming earnings report to validate that confidence.
Okay, let's talk about how the market is reacting to all this, because sometimes the story is great, but the stock chart looks like a flat line. What's the vibe out there?
Consolidation is the word of the day. If you look at the price action recently, the stock has been trading lower, dipping a bit, and generally underperforming the broader technology sector.
So it's not exactly a rocket ship right now.
No, it's in what we might call a boring phase. The sentiment is largely neutral. There was a report from Hunter Brook Media that caused some volatility, and the market reaction to the partnership news was surprisingly flat. It's like the market is in wait-and-see mode.
Wait and see can be good though, right? If you're an investor looking for an entry.
It can be. I interpret this lack of volatility as a potential base-building phase. The stock isn't showing clear bullish patterns yet. We aren't seeing higher highs, but it's not crashing through the floor either. It's holding a level.
Right.
This consolidation might be setting the stage for a breakout if, and this is a big if, execution improves.
It feels like the market has digested the bad news, the losses, the revenue dip, and is now just sitting there, arms crossed, waiting for Big Bear to prove the pivot is working.
That's a fair assessment, and it looks like some pros are starting to take notice. I saw Seeking Alpha rating upgrade from just a few days ago, February 18th.
That's right. That upgrade suggests that some observers are starting to see the potential in this strategic shift. They are looking past the ugly profit margins and seeing the value of the Moat and the Ask Sage integration. But again, the broader market sentiment is still officially neutral.
And honestly, neutral is better than bearish. It means the selling pressure might be exhausting itself.
So nobody is shouting from the rooftops yet, which brings us to the catalyst calendar. If I'm holding the stock or thinking about buying it, what dates do I need to circle in red on my calendar?
There is one massive date coming up, March 2026.
March 2nd, that's earnings.
Yes, Q4 and full year 2025 results. This is going to be the moment of truth.
What are we looking for? Just the revenue number.
We need to see if they hit that raised guidance of 125 to 140 million. If they miss that after raising it, the market will punish them.
Definitely.
But more importantly, we need to hear about the integration of Ask Sage. Is it actually generating revenue? Are clients signing up? And we want updates on the Mokta partnership.
It's basically a progress report on the pivot. If they come out and say Ask Sage is fully integrated and we have 10 new government clients, that changes the whole thesis.
Exactly. Aside from that, we have the macro wins. We are seeing a sector rotation with geopolitical tensions rising globally. Money is moving out of pure consumer tech and into defense and national security stocks.
Right. A rising tide lifts all boats, and BigBear.ai is definitely a boat in that harbor.
It is.
And I have to mention this rumor check I saw. There was some talk about a bipartisan federal tax credit bill for AI employee training that popped up around February 13th. Is that a real catalyst?
It's speculative. We have to be careful here. We don't take political sides. We just look at the legislation. If a bill like that passes, it provides tax credits for training employees on AI systems.
Okay, so how does that help Big Bear?
It doesn't give money directly to BigBear.ai, but it makes it cheaper for their clients, the government agencies and defense contractors. It makes it cheaper for them to train their staff to use BigBear's tools. So it's a tailwind, but don't buy the stock just because of a rumored bill.
Got it. Treat it as a bonus, not the main course. It reduces friction for sales, but it doesn't print money for them directly. Okay, let's wrap this up with the risks and the thesis. I'll play the pessimist first. The bear case.
Let's hear it.
The bear case is pretty loud here. The execution risk is sky high. They are pivoting the entire company. They just spent $250 million on a company that we haven't seen fully integrated yet. Operating losses are massive, and they are fighting giants. Palantir's huge. They have infinite resources. Why wouldn't Palantir just crush Big Bear?
That is a valid concern. Palantir is the gorilla. And if BigBear.ai burns through that cash pile before the new revenue streams kick in, they are in trouble. That is the definition of execution risk. They are trying to turn an ocean liner in a bathtub.
Okay, now give me the bull case. Why should we believe in this?
I give the bull case a score of 7 out of 10.
7 out of 10. That's pretty solid.
Here is the pitch. BigBear.ai is primed for upside because they have a defensible moat in a critical sector, defense AI. They have a massive cash pile of over $450 million that enables them to actually execute this strategy. They aren't begging for funding.
Right.
And because the sentiment is so neutral right now, the strategic diversification is arguably undervalued by the market.
So it's a value play in a growth sector.
In a way, yes. The market is pricing them like a struggling legacy company, but they are repositioning as a high-growth, secure AI company. If they pull it off, the re-rating could be significant.
What's the time frame? Are we marrying this stock or just taking it out to dinner?
I think this sets up well for a swing trade leading into the March 2nd earnings. There's often a run-up into earnings when guidance has been raised. But if the earnings are good, there's potential for a multi-year hold. If the defense tailwinds persist and the world remains, complicated, the demand for mission-ready AI isn't going away.
Complicated is a polite way of putting it. So essentially, we have a company with scary losses on paper, but a massive war chest in the bank, and a very clear mission in a dangerous world.
That's the summary. But the question isn't just about the technology. It's about whether they can integrate Ask Sage fast enough to justify the burn rate before the market loses patience. The clock is ticking, and March 2nd is the first alarm.
High stakes, high tech, and a race against the clock. That's what makes it interesting. But maybe the real provocative thought for you to explore is what happens to the broader tech market if government defense spending becomes the only truly safe haven for AI monetization. Something to think about as you build your own wealth strategy. Thanks for listening to Smart Wealth with Joshua. We'll catch you in the next one.